Hi, everyone. So, welcome to the live stream today. Always a pleasure as we continue with our discussion towards the August 2022 examination. And today, I want to give you 20 mark for financial public sector accounting and finance, because definitely in the exam hall, one of the things that you're going to be asked by the examiner is the preparation of the financial statements, either on the consolidated fund or for a covered entity. Now, that could be either a ministry, a department, an agency, a metropolitan, municipal, or a district assembly. But the principles and the rules that governs the way the financial statements are prepared is going to be crucial across board, because the application of the rules are going to be almost the same, with just some simple differences based on the kind of institution that we are dealing with. And that is exactly what we want to look at today. And I see some of you guys joining. You are welcome. We are looking at something relating to public sector accounting and finance today. It's a final account preparation. This is one of the concerns that you guys raised, that we looked at and we discussed on that, and that is exactly what we're going to be doing today. So let me know. I see some of you guys joining. Give us a thumbs up on the video, and always also put it in the comment section for me any questions you have, and we'll be able to answer your questions for you and provide you with some assistance that you need in order for you to prepare for your exams, and most importantly, pass the examination. Let me know, is my feed that strong? I think there is a little bit freezing on my feed. Uh, is my feed okay? Let me know. I see some of you guys coming in. Elisha said, "Hi, good evening, sir. Good evening, Elisha. Thanks for joining me on the live stream today." Emmanuel Latte Ajete said, "Good day, sir. Good day, Ajete. Thanks for joining us on the stream." Abel or Ogbonaya said, "Good evening, sir. Good evening, Abel. Thanks for joining us on the stream." Whiten Mateo said, "Hello, good evening. Hope you're doing well." Yes, I'm flourishing. Thanks for joining us on the stream today. So we want to jump into our discussion today. Remember, our discussion today will be centered, will be coming in from my book on public sector accounting and finance. We're going to be looking at a couple of questions relating to that particular aspect of the discussion, and also of the syllabus. So let's get excited into our discussion today, and let's see exactly what we can do today. So let's see. Yep, I think that could be better. Let me put myself a little at the bottom so we can have a bigger real estate for writing. So, public sector accounting and finance, it's one of the subjects in, level two that you have to be aware of, already, for those of you writing. And the financial statement preparation in public sector, it's also very basic that we need to know about, because there is a 20 mark question waiting for us in the exam hall in relation to preparation of the financial statement. Now, the financial statement preparation can be asked either for us to prepare on the consolidated fund, okay, on the consolidated fund. Now, if you are preparing the financial statements on the consolidated fund, meaning that we are preparing the financial statement for the central government, so we are preparing the financial statement for the government as a whole. Or we could be asked to prepare the financial statement for a ministry, a department, or an agency, or a metropolitan, municipal, or a district assembly, that is a local assembly in that particular case. Or the examiner can ask us to prepare the financial statement for other covered entities, that is, entities whose operations are financed either in part or in whole by the government from the consolidated fund. So the examiner can ask us to prepare a financial statement for a hospital, that is a government hospital. He can ask us to prepare a financial statement for whatever, some other state enterprise, a state enterprise in transportation or something like that. He can ask us to prepare for the financial statement of a school. In that case, as far as the institution is a covered entity, the institution's operations are financed either in whole or in part by the central government. The examiner can access anything that we need to do in that case. Now, so to increase your chances of passing or being able to prepare the financial statement here, it is not for you to try to beat the system or focus on, oh, the consolidated on the central government will come, or oh, preparation of the local government or a ministry will come, oh, the preparation of the financial statement for a an institution or something like that will come. Now, it is not for you to decide how which one will come, but it is for you to understand the principles that governs the way the financial statements are going to be prepared. Also notes that when it comes to the preparation of the financial statement by the uh, for the central government or for public sector entities, we are going to be guided with the Public Financial Management Act 2016, Act 921. Okay, Act 914. Think so. Like Act 914. That is the Public Financial Management Act. Then we are going to be looking at the Financial Management Regulation. The Financial Management Regulation 2019 also is going to be guiding us. We are going to be preparing the financial statement in accordance with also the IPSAS, that is the International Public Sector Accounting Standards, because we are going to be using the accrual basis of accounting for the preparation of these financial statements for the various entities that we are dealing with in that particular case. So it is very important we understand how revenue is supposed to be clarified, how expenses are supposed to be clarified, or classified or categorized, and then what basic IPSAs that we must adhere to when it comes to the preparation of the financial statement for covered entities or of covered entities. Now, basically, when it comes to the preparation of the financial statement for the covered entities, yes, we are going to be guided by the IPSAS. Primarily, we're going to be using the International Public Sector Accounting Standards. Now, there are a lot of IPSAS that we need to be aware of, but there are certain IPSAS that are key, that are fundamental, that we need to focus on in order for us to increase our chances of being able to prepare these financial statements, irrespective of the entity that we have in the question. So, number one is IPSAS 17, okay, and that is property, plants, and equipment. Property, plants, and equipment. This is a fundamental IPSAS because definitely the entities whose financial statement we are preparing, they are going to be dealing with infrastructure, property, plant, and equipment, and we have to deal with issues relating to depreciation. Now, normally in the public sector, we will say consumption of fixed assets. That is the same as depreciation, though. So we will say consumption of fixed assets. Okay, there may be issues relating to revaluation of assets. So you must know the way we treat revaluation of assets very well. Now, if you're a good student from the financial reporting class, this is the same as IAS 16. Okay, this is the same as IAS 16. But a couple of things that you just have to take into consideration is that when it comes to the public sector, especially when you're dealing with the central government, we're going to be looking at issues such as infrastructure, property, plants, and equipment. Okay, infrastructure, property, plants, and equipment. So when it comes to infrastructure, we may have issues such as infrastructure work in progress. We're going to have infrastructure work in progress. And when we have infrastructure work in progress, one thing that you have to take note is that depreciation is not charged on this. Okay, so no consumption of fixed assets or depreciation is charged on these. On work in progress, because work in progress means we're still doing it, we are still constructing it, we are still building it, it is not done yet. So until it is put to use, we cannot depreciate it. So when it comes to dealing with the IPSAS 17, property, plant, and equipment, yes, there could be infrastructure work in progress. We don't charge depreciation on that until the infrastructure is fully completed. Then we can charge depreciation on it for the period under review. Note that there are methods also of depreciation that you should know about, and you know this already if you're a financial reporting student. That is why it is advisable to do financial reporting and public sector together, because the methods of depreciation is going to be the same thing here. Issues about straight line method, which is what we usually see the examiner doing, or a reducing balance method, depending on whatever it is that we are dealing with in that particular case. So IPSA 17 is going to be a fundamental thing when it comes to preparation of the financial statements in the public sector, whether we are dealing with you remember I gave you three categories here. Whether we are dealing with a consolidated fund, which is the central government, or we are dealing with a ministry, a department, an agency, or we are dealing with a local assembly, that is a municipal, a metropolitan, a municipal, or a district assembly, or we are dealing with any other covered entity, a hospital, a transport business, a school, or whatever it is, as far as the activities are financed by the government, then we have to adhere. Even if it is the, national cathedral, that assuming it is done and we are preparing the financial statements on that, it is still going to follow the same rules or the same principles here, because remember, the national cathedral is being funded from the consolidated fund of Ghana. So it is more of like a state enterprise or a state institution, even though there are a lot of illegalities allegedly that has been raised about the allocation of the fund from the consolidated fund and how procurement things have been done on that. But even if it is that, you're going to prepare the accounts, you're going to follow the same principles. So that is the first fundamental IPSAS that we need to be aware of. IPSAS 17, property, plant, and equipment. Another thing that is also crucial for public sector entities, covered entities, is going to be the issue in relation to, is going to be the issue in relation to um, that. I'm seeing a chat coming. Matthew said, yep, yep. Thank you, Matthew. It's 921. Thank you. 921. Thank you for that correction. Okay, so yeah, thank you for that correction, Matthew. So the second IPSAS that is crucial is going to be the issue relating to IPSAS 12, inventories. Inventories. Inventory. Now, this is the same as IAS 2, inventories, as you know already. But you got to be careful here. In the public sector, the way inventory is accounted for depends on how the inventory is being treated. So maybe the inventory will be for use by the entity, or maybe the inventory is for distribution at no fee. Now, when the inventory is for use by the entity or the inventory is for distribution at no fee, it is carried at lower of cost. It is carried at lower of cost and replacement cost. Stay with me carefully. You got to be careful about this. So when the inventory is for use by the entity, meaning they use it in the day-to-day running of the organization, or they distribute it at no fee, they don't take any money for its distribution, then what is going to be happening is that they will carry the inventories at lower of cost and replacement cost. In other words, we compare the historical cost. What was the initial cost at which we bought the inventory compared to how much we will pay right now if we want to buy that same inventory? The lower of the two becomes how we carry the inventory. However, if the inventory is for sale, okay, inventory is for sale, meaning that the entity is going to distribute it at a fee or receive some proceeds from it, then it is carried at lower of cost and net realizable value. It is carried at lower of cost and net realizable value. Lower of cost and net realizable value. Okay, so that will be how we account for inventories. So there are a lot about IPSAS 2, sorry, IPSAS 12 inventories, but the key takeaway is what I want you to understand here. It's about the way we carry inventories. If the inventory is for use, if the inventory is for the day-to-day running of the organization, if the inventory is part of the things that like spare parts, things that it's part of the entity's operations, then or the entity distributes it at no charge, then you know we're not going to charge anything for that. Hence, it is carried at lower of cost or replacement cost and replacement cost. But if it is inventory that is for sale, it is carried at lower of cost and net realizable value and net realizable value. So that is the issue about that. Any questions? I see some of you guys joining. Give us a thumbs up on the video when you join and comment in the chat or the comment section any questions you have for me. I want to answer your questions for you. We're focusing on public sector today and looking at the financial statement preparation. But before then, some fundamental issues are very critical for us to discuss, and that is what we are looking at here. So IPSA 17, property, plant, and equipment, very crucial. We cannot overemphasize the importance of this particular standard because it is basic and we must know about it very, very well. It is very basic and we must know about it very well. Then we come to IPSAS 2, that is the inventories. Also, another basic issue that we need to know about as we move on with our discussion. Then the next IPSAS that you need to know about relates to revenue. Revenue. You see, when it comes to revenue in public sector, there are two key IPSAs that you need to be aware of. And I want you to be careful about this with me very carefully. Because in the public sector, revenue can be categorized into two. We have what we call revenue from exchange transactions, revenue from exchange transactions, and then we have revenue from non exchange transactions. Revenue from non exchange transactions. So when it comes to revenue, there are two key IPSAs. Now, revenue from exchange transaction is where we are looking at IPSAS 9. So that is IPSAS 9. Revenue from non-exchange transaction is where we are looking at IPSAS 23. So there are two key IPSAs that governs the way we account for revenue here. Now, what is the meaning of these? What is the meaning of this? When we say revenue from exchange transaction, it simply means that, an exchange transaction is simply a transaction in which the entity receives money and gives something in return for the money that it receives. Are you getting it? So that is the idea. That is the idea basically. So exchange transaction is a transaction in which the entity transfers goods or services for the consideration received. For the consideration received. The opposite of that is true. In the case of non-exchange transaction, guess what? The entity receives the money without transferring any consideration. That's all. Are you getting it? So the opposite of that is true for non-exchange transaction. The entity receives the money, but they don't give you anything in return. So, what are these things that we need to know about generally? Now, depending on where you are and then the way you classify revenues generally. So, for instance, if you're in the central government perspective, okay, if you're in the central government perspective, If you're in the central government perspective, then revenue is going to be classified into the following category. So we're going to have tax revenue. But then the tax revenue generally will come from IPSAS 23, that is revenue from non-exchange transaction. Because with tax revenue, you pay the tax to the government, but you don't get anything in return directly. What do you get when you pay your tax? You don't get anything directly, right? So tax revenue is accounted for in accordance with IPSAS 23 because it is revenue from non-exchange transaction. When you go to the GRA portal now and you pay your tax in Ghana, you pay your tax right now using your mobile money or your credit card, your MasterCard or Visa or whatever the heck you use. Um, you're not going to get anything in return immediately, like directly. So it is revenue from non what? Exchange transaction because the government doesn't give you anything. But when it comes to tax revenue, they are further divided into what we call direct taxes. Okay. And then we have indirect taxes. And you know this already. I'm not the one going to teach you about direct taxes or indirect taxes. Direct taxes are levied on the income, you know, they are levied on the income, gains, or profit, you know, of businesses. They are taxes levied on the income, gain, or profit of businesses. That's what we mean by direct taxes. So, from the central government perspective, when we are doing our workings, the first workings we will look at is direct taxes. So, all forms of direct taxes will be included here. And this one will include PAYE, that is income tax by individual. That's what you pay if you're an employee of a company. Then, corporate tax, that is paid by companies on their profit for the year under review. That is going to be a direct tax. Then we're going to have issues relating to rent income tax paid by landlords. Okay, rent income tax paid by landlords. When they receive their income, they are supposed to, file tax on that from the central government perspective. So these are some examples of that form of that. The indirect taxes will include issues such as, you know that already, these are consumption expenditure. Okay, they are taxes levied on consumption expenditure. So, in other words, you only pay the indirect tax when you consume the service or something like that in that particular case. And that is typically the value added tax. Okay, the excise duty, customs and excise duties. Okay, it's a form of indirect tax in that particular case. Okay, then your e levy could be seen as indirect tax because it's a more of a consumption expenditure, like because you want to use the technology, then you have to pay the tax or whatever it is in that particular case. So, it could be a form of indirect tax that is coming in, even though it looks like we are charging your real income. But because if you don't use the technology, then you don't pay the tax. So that is why a lot of people have dodged the e-levy. They don't pay it. And now Ghana has to go to IMF, and IMF is in the country now. They are negotiating, and very soon, by next week, Wednesday, they will reach a conclusion, and it will take around 4 to 6 months for them to finish everything. Then, you know, Ghana will be enrolled properly. They will wire their money, and then everything will be done for Ghana generally in that particular case. So these are some forms of indirect taxes. So from the central government perspective, we're going to first have tax revenues. Okay, tax revenues. Then we're going to have second one, non-tax revenue. Non-tax revenues. Now, the non-tax revenues, they are revenues that government receive from the central government perspective, and some of which could be relating to non-exchange transactions, some of which could be related to, exchange transactions. So, for instance, under the non-tax revenue, we could have issues relating to coming in for. Let me pick another ink. So, under the non-tax revenue, these are other forms of revenue that the government is receiving, and they are not coming from the tax sources. Okay, they are not coming from tax sources. So these can be issues relating to, fees. Okay, fees that government charges for services. In that particular case, that will be go to the central government's perspective. We could talk about issues like fines, penalties, and forfeitures. Fines, penalty, and forfeitures that could be part of non-tax revenue in that particular case. Sometimes issues relating to even revenue from petroleum sometimes can be classified under the non-tax revenue, especially if we are doing ratio analysis in public sector. It could be classified here. Then sometimes under non-tax revenue, dividend, you know, income will come here. Government has a lot of investment in various companies like Vodafone Ghana, like Anglo Gold Ashanti, like other companies that the Ghana government has investments in. At the end of the year, they're going to pay dividend, and one of those companies is the Golden Tulip, and that has been rebranded. The news is that the stake of Ghana and I think Liberia also has been sold out, even though the news is not clear, so it's an alleged news. It has been sold out to Lancaster, so now it is Lancaster, Accra, Lancaster, Kumasi. But whatever it is, whatever government has stakes in, they're going to be receiving dividends relating to that. Then under the non-tax revenue, also proceeds from disposals, proceeds from disposals of assets, various assets, state enterprises, assuming we want to sell the Ghana airports, or we want to sell whatever entity or whatever organization or whatever institution that we want to sell, the proceeds from that could be treated under non-tax revenue in that particular case for the period under review. Okay, for the period under review. So these are some of the things that may come under non-tax revenue. There could be others, but these are some of the things that will come under that. So we have the tax revenue, very critical. We have the non-tax revenue. Now, note that. Okay, I'll talk about this in a moment. Let me go to the third one, and that will be grants. Grant is very crucial because government receives grants a lot, and there are various types of grants that governments can receive. We have what we call bilateral, grants. Okay, we have what we call multilateral, grants. All our grants. Okay, multilateral grants. We have capital project grants. All right, then we have maybe program grants. It could be, there are various types of grants. It depends. Whatever it is, it's a grant. Okay. It's a grant that government is receiving. So grants revenue. Grants revenue will come in. Now, bilateral grant is a grant received from another country, another government. So, for instance, if we receive some free money from China, it is bilateral grants. Multilateral grant is where we receive free money from a multinational institution like the World Bank, okay, like the IMF, okay. Those institutions will be referred to as multilateral grants. So during the period of the COVID, we were wired about $1 billion dollars and wired about some other forms of money by the IMF and World Bank, but for some reason, this government was not honest with it, and it took the IMF to come out to come and clarify how much money they actually gave to the government, and you're like, who the heck is lying here? But it is what it is. Capital grants or project grants are for finance for capital projects, maybe a road construction, okay, a bridge, or maybe whatever, a school or something like that. That is capital project grants in that particular case. Then program grants, probably government is undertaking a program, maybe free SHS, okay, it's a program, and so we can receive a grant specifically to finance the free SHS. That is a program grant. Or maybe planting for food and job, or whatever the heck their policies are, you know we could receive grants specifically to that. But you got to be careful here. I want you to be careful about grants. Please be careful here. Note that when it comes to grants recognition, we will only recognize grants when the government or the entity has fulfilled the conditions attached to the grant, because certain grants are conditional. Okay, so grants shall be recognized. Grants shall be recognized as revenue only when the entity has fulfilled, only when the entity has fulfilled the conditions attached to the grant, only when the entity has fulfilled the condition attached to the grant, and the grant has actually been received. You got to be careful about this one. So what does that mean? You see, there are certain grants that when they are given, there are certain conditions that must be met. So if during the year, so let me give you scenario number one. If during the year, the government of Ghana receive a grant, let's say from who? Let's say China, for let's say whatever, $420 million from China. So we've received the money, but then the conditions attached to the grant, we have not fulfilled it. Then in that year, let's say we received that money in 2021. Then in 2021, we cannot recognize that as part of the revenue for 2021. Instead, it will be recognized as a deferred income. So the journal entry will be, we're going to debit, yes, cash or bank of the consolidated fund for $20 million. Then we're going to credit deferred, income for $20 million. And that will go to the statement of financial position as maybe a current liability if we expect to fulfill the conditions to the grant in the subsequent year. Are you following the picture? So we received the grants, but we have not fulfilled the conditions attached to the grant. You cannot recognize the grants in the books. Scenario number two. What if we have fulfilled a condition? So let's say that the government of Ghana, okay, GOG, the government of Ghana has fulfilled the conditions attached to the grant, the conditions, but yet to receive, the grant. Okay, we have fulfilled the condition, but we are yet to receive the grant. Please, we do not prepare financial statement based on promises. Take note of that very well. Financial statements are not prepared based on promises. Financial statements are not prepared on promises. So what do we do? In that case that we have fulfilled the conditions, but we have not received a grant yet, it's a grant, it's a promise. So for instance, I say that, oh, if you pass your exams, I promise you that, oh, if you pass your exam, I'll buy you a Tesla Model Y. Okay, it's a promise. No, you pass the exams, then I'm not under obligation. It's not a contract. I promised you, it's not a big deal. In that case, if anyways you are helping yourself to pass the exams, if anyways, whatever condition it is, you are helping your country anyways. So you don't recognize anything. If anything, what's going to be happening is that we would disclose. So disclosure in the notes to the financial statement. You cannot recognize revenue for this. You have to disclose it in the financial statement. Okay, so when it comes to grants exclusively, these are the things that you have to understand. These are the things that you have to take notice of. That the fact that the grant has been received does not mean we can include it in revenue. If we have not fulfilled the condition, it should be recognized as a deferred income. If we have fulfilled the condition and the money has not been wired yet, we cannot still recognize it. You don't say, we have fulfilled the condition, so let's recognize. No, you don't do that. So what do? It is only when the money has been received and we have fulfilled the conditions that we can recognize the grant in the financial statements. Okay, does that make sense? Any questions, you put it in the chat for me, and I'm going to be answering that for you. If there are any questions and something you would want me to share my thought on, you can put it in the chat. So, tax revenue, non-tax revenue, grants, grants. So these are the three key revenues of the central government. These are the three key revenues of the central government. Now, there could be other source of revenue based on the way the question is structured or whatever the heck it is. Then, still from the central government perspective, let's look at some expenses that we would have to take into consideration. Some expenses. From the central government, one of the core expenses will be what? Compensation of employees. So, compensation of employees. This is very basic. So, everything that relates to payments to employees is going to be recorded here. It's going to be recorded here. So, all items relating to remuneration, that could be in the form of wages, it could be in the form of salaries, it could be in the form of pensions, or whatever the heck, ex gratia, all of that those guys will be recorded in this particular place. All right. So the Gangantua S gracias, all of those guys, it's part of compensation. So anything that relates to remuneration that we give to the employees will be coming into this part. Number two is going to be goods and services. Goods and services has to do with the administration, you know, of the country. Okay. So administration. So we're gonna do rent, we're gonna do electricity bill, we're gonna do workshops, we're gonna do seminars, we're gonna do travel. Like the way our president travels like that, all of those travel expenses will come under goods and services. All right. So you travel, you hire, you rent all the private jets, you travel around and you are chilling and you are working for the country. Yeah, we feel you. All those things will come under what? Goods and services in that particular case. So anything that relates to the administration of the country is going to be coming under goods and services. So workshop, travel expenses, seminars, rents, consultancy that we will pay, all of those things will come under goods and services. So for instance, issues that relates to issues that relates to the construction of the National Cathedral, all of those things that have been paid out to the people will be accounted for here as part of goods and services, because it could be part of the you know, day-to-day administration of the country, or in a way, I don't know, because it's more expenses, because the National Cathedral is not technically registered as a state enterprise, it's not a state institution, they would treat all those expenses as goods and services. So for instance, allegedly, the architect that was paid about $12 million, allegedly about $12 million for the design of the National Cathedral. All right, $12 million for the design. However, the Burj Khalifa, which is a $1.5 billion project, also $1.5 billion project, the architect for that charged $1.8 million. So you ask yourself, what the heck is your national cathedral $12 million? And government has paid for this. For your information, it's paid for. So those kind of expenses may be categorized under goods and services. Okay, those kind of expenses may be categorized under goods and services, since the National Cathedral is not enacted by an act of parliament to be a state enterprise. So those expenses will be recorded as part of goods and services, as part of the day-to-day running of the economy. So compensation of employees, goods and services. Number three, public debt interest, very critical. Public debt interest. Where Ghana is now, we owe and owe and owe, and we gotta pay interest. So a lot of issues are going to be coming up about public debt interest. It's one of the fundamental expenses that the central government is always going to be looking out for. So it is very crucial for you to get this well. Now, remember, as you are dealing with the expenses, we are still in the accrual basis of accounting. So there could be footnotes relating to some outstanding expenses, relating to outstanding compensations, relating to outstanding goods and services, relating to outstanding public debt interest, and all that must be accounted for. So public debt interest, very crucial. Now, since we are in the central government, there is going to be grants. This is grants payment. Or if you want, transfer to statutory fund. Transfer to statutory fund. Now, I want you to stay with me carefully here because I'm going to be illustrating something here. Transfer to statutory funds. Like, for instance, now, again, many of the funds of Ghana has been collateralized, meaning that they have been used as collateral facility to take loan. And so even though money goes into the fund, it is not used for anything in this country. So because the money has been collected and, allegedly chopped already. So the GET fund, we make a transfer into the GET fund. The transfer will be made into the District Assembly Common Fund. Now, remember, as per the 1992 Constitution, a minimum of about 7.5 percent of tax revenue. Now, for the purpose of the exams, the examiner is going to tell you whatever rate it is that you have to use. Okay, for the purpose of the exams, the examiner is going to tell you the rates that is they have to use. But usually, it is going to be 7.5% of tax revenue received. Okay, tax revenue received during the year. Now, I want you to be careful here because the key word here is tax revenue received, not total tax revenue, because there could be tax revenue outstanding during the year. What is outstanding? We don't care. It is the actual tax revenue we received during the year that we're going to transfer about 7.5% into the District Assembly Common Fund in that particular case. And that will be an expenses there. Now, we could do a transfer to road fund, another fund that has been allegedly collateralized, and then any other fund. We have the sinking fund. That is the fund set up for the repayment of loan. We have the contingency fund, the fund set up to deal with issues that are not budgeted for in that particular case. So in the question, what am I trying to say? This is what I'm trying to say. In the question, when you see grants and it is on the debit side of the trial balance, so stay with me. If the examiner should give you a trial balance and then you see grants, okay, so let's say this is a trial balance. So it's on the debit side, it's on the credit side. If the grant is on the credit side, that means it's a revenue. Are you getting it? That means it's a revenue. But if you see the grant, okay, and it's on the debit side, that means it's an expenses. So be careful. If you're in the trial balance and there is grant on the credit side, that is an income, that is revenue, that is added to the income of the entity in question. No problem about that. But if you see grants on the debit side, that is an expenses. Okay, what if in the question you don't have a trial balance and all you have is entries and the examiner says grants? And then you have the figure there. In that case, you can treat it anyhow and you're going to be correct. You can either treat it as an expenses or treat it as a revenue, but not the two. You just have to choose one and you'll be correct whichever treatment you're going for. Does that make sense? Because whether you are dealing with a covered entity, a covered entity that is an entity whose operation is financed either in part or in whole by the government or the central government, they do grants, they give out grants, they receive grants. So if the question is quiet, so you just have an entry like this and you see grants, you may choose to treat it as a revenue. Another person may choose to treat it as expenses. It does not change it. You are still correct and you will be marked right. But if you are having a trial balance and the figure is on the credit side, that is an income. If the figure is on the debit side, that is an expenses. Why? Because government and government entities receive grants, whilst government and government entities give out grants. Okay, so they receive grants and they give out grants as well. So that is the idea about what you need to understand when it comes to government grants. Let me know, are there any questions for me? If there are any questions, you put it in the chat for me. So that is the fourth item Under expenses, grants, grants, grants. Let's see. I see some chats coming in. Let's see if I can. I don't know who is this. Hamza Ado said, "Good evening, sir. May Almighty Allah bless you for contributing to our success. Amen. Thanks for joining us." Hamza L. Brown said, "Good evening, Nhyira. You are on top of the game. God bless your good work. God bless you, L. Brown." Whoa, that name L. Brown. So thanks for joining us on the stream as well. So we have compensations, we have goods and services, we have public debt interest, we have grants, then we will have subsidies. Government gives subsidies. Only that these days we don't know if the subsidies are available to us again. So number five, the institution is going to give subsidies. Subsidies. Now remember, whether you're in a central government or you're in a covered entity, you're in a local assembly, these workings will be done. When it comes to the expenses, you will follow the same classification. You will follow compensation. You will follow goods and services. You will follow interest. You will follow subsidies if they give any subsidies. So it could be subsidy on fuel, whatever, subsidies on food, subsidies. What else do they even give subsidies on in this country, in that particular case? So subsidy on food, subsidy on fuel, subsidy on electricity, and water. Like the time of the COVID, that they said free water and free you know um free water and free electricity, and you saw people were happy about it, foolishly displaying and destroying the water, and the presidents and all the members of parliament were gallivanting around. Oh, we've given free water, we've given free water, only for us to now come and see that government says, oh, the water that you use for free, the electricity relief that was given for free, guess what? There was a debt. So now there is a COVID recovery levy of 1%. However, recently, the finance minister went to parliament and now said, oh, by the way, the COVID fund, the donations we received for the COVID fund, we used a portion of that money to pay for electricity and water. So you are like, who the hell is really lying to us in this country? When you have used a fund to pay for the free water and the free electricity, then you have brought another a levy, and we are paying for it again. It doesn't add up though, but we move. You are who to say? You just go ahead, learn your thing and go away. Know how to increase your income so that you can survive in this part of the world. So that is the issue about that. I'm seeing a chat coming in from Senam. She said, please, does this Assembly Common Fund also issue grants? This Assembly Common Fund, did you say this Assembly Common Fund? The District Assembly Common Fund is a fund on its own, and it's an expenditure to the central government, and it's an income to the local assemblies. Or are you asking whether the local assembly also give grants? Is that what you're trying to say? Let me know, Senam. Give me some context to your question, then I can provide you with a better answer in that case. Give me some context to your question, because it doesn't sound well for me. Local assemblies, covered entities, they give grants. It could be educational grants. Are you getting it? It could be educational grants, or it could be grants to entrepreneurs or small businesses. So they also give out grants. So if you're asking about the local assemblies, other covered entities, ministries, departments, and agencies, they also give grants, just like how the central government gives grants in that case. Okay, so I believe you understand my explanation now. So the local assembly give grants. It could be an educational grant, it could be a scholarship grant, it could be entrepreneurship grants. Like I said, they give grants out to various purposes or for various purposes. So that could be there. Let me know if you understand now. So subsidies is going to be an expenses in there that we need to look out for. The number says consumption of fixed assets. Sometimes you may have to work for this. Sometimes you may have to work for this. Sometimes it will be directly given to you in the question. Whatever be the case, you got to be in the position to be able to work it out and find your way when it comes to it. If you have to work it out, then you follow the IPSAS, 17 that we spoke about, property, plant, and equipment. If it is given to you directly, hooray, you just pick it up and go away in that case. So consumption of fixed assets is one of the things that will be coming up there that you need to know about. So compensations, goods and services, public debt interest, grants payments, subsidies, consumption of fixed assets, social benefits, you know, social benefits. Like the free water I was talking to you about is under social benefits. All right. So the free water and the free electricity allegedly, which was given to Ghanaians because I didn't enjoy that thing. And they said we have already paid for it from the COVID fund, but we are still paying for it. And you don't know who is saying the truth or who is lying, though. But those free water and free electricity allegedly given will be social benefits. Okay. Or maybe government gives support to maybe some selected group of people, maybe some disabled people are supported by the government, or maybe pregnant women are supported by the government, or maybe some people, maybe there was a natural disaster and government releases some funds through NAPCO. Did I say NAPCO? Um, through NADMO, that is what I was looking for, and I said NAPCO. NADMO, I mean, to support the people, maybe their house got burned, or the flood issues that are happening in this country. It will happen every year. So the flood issues that are happening in the country, for instance, maybe some people's house get flooded and they lose everything. Then the government goes to give them supplies and all those things. Those are all under social benefits. Okay, those all those things will be classified under social benefits or put under social benefits. Like I said, maybe some free water given to people or free electricity given to people could be under social benefits in that particular case. Issues relating to some things like the free SHS could be part of social benefit. Okay, because it's a way to alleviate poverty. School feeding program could be part of social benefits. It's a way that government is supporting the people, the citizenry, to help them, educate their children or their wards. But the free SHS has its own headache, because many of the universities are complaining about the quality of the students, because on paper it looks like they have qualified, but what they are writing, it's really foolishness at the end of the day. So allegedly, the universities are considering entrance exams, because even though the free SHS bunch seems to qualify on paper, they are writing foolishness also when it comes to their scripts. And you are like, what the heck is this? I thought you got a certain grade. What the hell are you writing now? So I mean, the quality of the free SHS issue is in it's debatable, but it's one of the things in there. So all those things can be classified or grouped under social benefits when we are doing our workings for the exams. So technically, you're going to be doing workings for all of these things in the exam hall. Technically, you're going to be doing workings for all of these things in the exam hall. Okay, so Senam said, I understood now. Okay, that's fine. That's fine. Any other questions, you put it in the chat for me, and I'm going to be providing you with some answers as we look at these things. So, compensations, goods and services, public debt interest, grants payments, subsidies, consumption of fixed assets, or what we can call depreciation as well. Then the issue about social benefits, like we said, any form of assistance that government gives to the people or to a group of people in the country can be classified under social benefits. Then number 8, other expenses that may not be necessarily classified under anything, may be put under this particular one. So other expenses could be brought here. So, like I said, whether we are in a local assembly, we are in a covered entity, we are in whatever it is, some of these expenses are going to be classical as far as we are dealing with a public sector entity. Some of these expenses are going to be classical as far as we are dealing with public sector entity. So when it comes to the central government situation, These are the key sources of revenue: the tax revenue, the non-tax revenue, grants revenue. Any questions, please? Any questions? Then we come exclusively to the local assembly or the local government. The local government is where we are looking at the metropolitan, municipal, and district assemblies. The metropolitan, municipal, and district assemblies. So when it comes to the metropolitan, municipal, and district assemblies, what are the sources of revenue that they have? Now, for the metropolitan, municipal, and district assemblies, their revenues are classified into three. We have what we call decentralized transfer, decentralized transfers. Then we have what we call internally generated fund, IGF, internally generated fund. IGF. Then we have, other forms of funds that we need to look at for borrowings and donations. Okay, borrowings and donations. Now, so let's talk about this. Decentralized transfer is usually, like the name suggests, it's transfer from the central government to the local assemblies or to the local government. Let's put it that way. Any amount that is wired from the consolidated fund to the local assemblies is what we refer to as decentralized transfer. Okay, it's what is referred to as decentralized transfer. Statutorily, one of these things is the District Assembly Common Fund. And I've told you about it already. So the District Assembly Common Fund is the primary source of revenue to these organizations. But not only that, let me go to my slide here and give you some other items here, like grants in aid. Grants in aid. So, like for instance, the grant in aid is also another transfer that the government makes. Now, that is an optional transfer. Remember, this is statutory. Okay, this is statutory. As per the 1992 Constitution, we have to transfer a certain amount of money, minimum, into the District Assembly Common Fund. Now, the government can modify that and increase it to whatever rates that it wants in that particular case, to whatever rates that it wants in that case. However, that is statutory. But there are some also optional that's or optional transfers that can be made that we have to know about when it comes to dealing with this particular issue. When it comes to dealing with this particular issue. Now, granting aid is issues such as maybe one district, uh, $1 million. Is that what they said? No, one constituency, $1 million. I think so. That promise, I don't know where that promise has gotten to, but that is grant in aid in that particular case. Issues like one village, one dam, that is like grants in aid in that case. So one constituency, $1 million. One village, one dam, one people, one toilet, all of those things are a couple of promises. In this country, we joke like things, but that's the idea there. Okay, so we have the District Assembly Common Fund, we have the grants in aid also coming in. Then there could be other transfers from the central government, other transfers. Like for instance, government paying for the wages and salaries on behalf of the local assemblies, on behalf of the local assembly. So usually government is supposed to give them the money, then they will make the payment. But sometimes government will make the payment on their behalf. Now, when such transaction happens, it is treated twice. We treat it as revenue and we treat the same thing as an expenditure. Are you getting it? We treat the same thing as revenue and we treat it as expenditure. That is the idea there. So those are decentralized transfers. Any money that is received from the how do we call it? From the central government or from the consolidated fund to the district assemblies. Then the internally generated fund, it's, they are primary revenues that they raise internally in that particular case. According to the Local Government Act, certain metropolitan municipal and district assemblies are mandated to collect some kind of revenue to finance their operations. And these revenue sources can be categorized into licenses. So various types and forms of licenses. Now I'm discussing this from my book on public sector. Okay. So various forms of licenses. Various forms of licenses. So it could be whatever license, fees and miscellaneous charges, lorry park fees, fees paid by Choba, market dues, rates, on properties and other things, fines and penalties, AMA on street parking, KMA on street parking. Those are it. Investment income. It's also something that they receive in that case. Then taxes on income earners in the formal sector, especially the income tax stamp. All those things are internally generated fund, and it is the Local Government Act that mandates these metropolitan, municipal, and district assemblies to collect these revenues. So, in your workings, if the question is a local assembly, if it is a metropolitan, a municipal, or a district assembly, you have to categorize your workings under IGF into these licenses, fees and miscellaneous charges, rates, fines and penalties, investment income in that case. Now, the idea is that usually any money received by the metropolitan municipal district assemblies must be paid into the consolidated fund, but that is not what is done. So for instance, if their budget allocation is, let's say, I want to write dollars, but we got to respect our Ghana city, the West currency though. Let's say the budget for the municipal is say 400 million Ghana cedis for the year. If internally generated fund, they can generate maybe $250 million, then what is going to be happening is that we will only have to transfer $150 million from the consolidated fund to them. So that is the rationale. Once you can, generate some money inside, that will be used to reduce how much you budget to spend in the budget period. Then the excess amount is what will be sent to you from the consolidated fund. This helps to reduce the pressure on the consolidated fund and helps the central government to focus on other national projects in that case. Now, if it happens that the municipal or district assembly or the organization generates more revenue than they need for their budget, then the excess will be paid back into the consolidated fund as well for the period under review. So that is the concept also about the IGF, and that is the local assembly that we need to know about, or the local government that we need to know about. Any questions, please? I'm seeing a question coming in. Let's see if I can look at that. Timothy said, "Sir, please, what is the difference between supplementary budget and revised budget?" Supplementary budget is an additional budget. Revised budget is changing the original budget. Did you get that? Oh my God. Supplementary budget is an additional budget. I'm just giving you the KG2 definition. Then I'll expand on it. Don't worry. Then the revised budget is changes made to the original budget. So really, the revised budget is your original budget plus the supplementary budget. Let me explain. You see, as per the 1992 Constitution, and as per the Public Financial Management Act, and as per the laws of Ghana, and as per Public Financial Management Act, all of those things, the finance minister is required to, present to Parliament mid-year review on the budget, on the implementation of government's budget. So I think this year's own will be done. I don't know. I think next week or so, maybe 15th. I don't know, 15th of July. I've forgotten the date. I had the dates today, but I've forgotten the date. So he's going to appear before Parliament. So when he appears before Parliament, if government needs more money, the more money they need will be put into what we call the supplementary budget. Are you getting it? That is the idea about the supplementary budget. So it is an additional budget sent or to Parliament during the mid-year budget review, requesting for additional funding, requesting for additional authorization to spend more money for the year under review. Now, when we add that additional funding, additional request that the finance minister sends to Parliament to the original budget that was approved, say November or December for the year, that gives us what we call the revised budget. The revised budget. So that is why I said the revised budget is the original approved budget plus the additional budget or supplementary budget presented to Parliament and approved after the mid-year budget review. When you add the original budget to the supplementary budget, it gives you the revised budget. Does that make sense? I try not to sound more technical. I just want to make it more simpler for you to understand. Let me know, Timothy, if you understand the explanation on the supplementary. Okay. Okay. Thanks, Claire. All right, that's nice there. Any other questions for me, please? Any other questions? So on the central, now remember the local assemblies also receive grants. They receive donations. So if they receive grants, they receive donations. We will have to also account for them in that particular case. L. Brown said, please say, how do you work for share of District Assembly Common Fund on equal distribution to all local governments? November 2017 PSA. Okay, maybe I would have to look at the question, but the issue is once we know how much money that is coming into the District Assembly Common Fund, and we know the number of districts that we are dealing with, then you divide it by the number in that case. So I will check that specific question that you are talking about, and maybe I can comment on that on Monday when we continue with our discussion on this one. So let me just take note of that. November 2017. So I'll take note of that and then let you know. Kwejo Boachi Adam said, I am not writing PSA. I passed already, but CR and I must say you are really a blessing. Your videos have been very helpful in understanding some basic standards. I was finding challenges to understand. That's great to hear, Kwejo Boachi Adam. Wishing you the best as you prepare for your corporate reporting examination. And I hope that you are attending lectures and you are preparing well for the exams. So basically, that is what we need to understand about revenue management and expect. Now, the topic I just discussed with you is revenue management and expenditure control, partly revenue management and expenditure control, because that topic is the basis for the preparation of financial statements, is the basis for the evaluation of financial statements. So please, whatever it is that you have, if you're writing public sector, make sure you familiarize yourself with this topic: revenue management and expenditure control. Revenue management and expenditure control. It's very, very important. It's very, very important. Then you have to make sure that you are strong with your PIFA, because these two topics will set the tone for you for the 20 marks that you are going to be. Then PIFA, IPSAS. Let me add that to it because I discussed that. Also, the IPSAS. These three issues will set the tone for us for the 20 marks in the final account preparation and for the 50 marks when it comes to the ratios, performance measurements as well. And that is 35 marks coming in from these three issues. So you have to be careful about it. Revenue management and expenditure control, especially because you could get a direct question, but like 10-mark question coming in from revenue management and expenditure control. But then the knowledge from there is where is what we are using for the financial statement preparation. So everything I'm giving you here is from the topic relating to revenue management and expenditure control. So you have to be solid about it if you're going to pass your public sector examination. So I'm going to conclude around here. today, and God willing, Monday we're going to take a full question on public sector and see how we can prepare the financial statement for a public sector entity. Now that we have some understanding on what the revenues are, what the expenses are, then what the things that we have to take into consideration. We're going to be looking at these a little bit on Monday. So on Monday at 4:30 p.m., I'll be coming your way, and we're going to be continuing with our discussion. Now you can join me tomorrow at 7 p.m. I'll be doing a masterclass on IFRS. It is our masterclass exclusively for our paid students, but we're going to be streaming tomorrow's session on the channel. So you can join me tomorrow. It will be streamed on YouTube. So if you're on Facebook, then you got to join me on YouTube tomorrow at 7 p.m. I'll be coming your way for some IFRS masterclass because we're going to be streaming the session on YouTube tomorrow in that case. So you join me tomorrow at 7 p.m. But then on Monday at 4:30 p.m., we are going to continue with our discussion relating to the public sector, and then we'll prepare some financial statements in that case. Adas Rectitude said, please, do you have a book on taxation? Yes, we have a book on taxation, as you can see in this particular screen here. We have a book on taxation, and we have a book on public sector. We have a book on corporate reporting. We have a book on financial reporting. We have a book on advanced audit and assurance. My goodness. We have book everywhere. So you can call or WhatsApp us 05011499296. And or you can, hit Amazon and you can get some of my books. I've published 19 books so far relating to various subjects. My latest books are there. Corporate reporting, financial reporting, public sector, taxation, advanced audit and assurance. These are my new releases in the last, I think, 1 or 2 years or so. So yes, we have a book on taxation, and you can get a copy of that at 120 cedis. You can call or WhatsApp 05011499296. The number is below the screen, scrolling below the screen as well. You can see it, and we will be able to deliver nationwide. So that's it for today. Thank you very much, guys, for joining me on the stream. Quick Kwejo Boachi Adom, Bra Linus, Avoka Gajesberg, Abdul, and then Mario Okwe. Thanks very much for the thumbs up on Facebook. And thanks, guys, for the thumbs up on YouTube as well. We really appreciate it. I will catch you tomorrow, 7 p.m. for our IFRS masterclass. Then on Monday at 4:30 p.m. as we continue with the public sector discussion. Have a great weekend. Stay safe, and I'll see you some other time. Bye.